This chip shortage is so intractable that I doubt it will be resolved by the first quarter of next year, and I thought it could be. The semiconductors we desperately need still aren't expensive enough for foundries to manufacture them en masse. I wish they would just raise the prices to where they could extract enough value and make more right now. We know automobile chips, which are dumb chips, so to speak, or full features, they like to call them, make up just 4% of the largest foundry's production. That's Taiwan Semi. And they're not going to start making chips, cheaper chips out of the goodness of their heart. Either of these low-cost chips get a lot more expensive or they just don't get made. Of course, in any of this, you see Jay Powell, is he in charge of any of this? I mean, I read about all these people. They attack this guy constantly. Hey, Senator Warren attacked him. I thought that was unreasonable. He doesn't make chips. He doesn't pump oil. He didn't know cashiers need plexiglass screens that are now in short supply. He didn't know we can't make enough plastic. He didn't anticipate that we wouldn't have enough windows or doors or appliances or sinks or tubs or toilets or anything involving, say, like grouting. You know, I mean, hey, floor tile. I can't get floor. If you have floor tile, just give me a jingle and direct message me. Even the home builders couldn't predict this, and that's their business. Every one of these issues stands in the way of higher stock prices. Do not even get me started on the debt ceiling. Possibly if a government-mandated default, no matter how fanciful, has pushed bond prices down and bond yields up. When you've got rising interest rates and raging inflation, most stocks are roadkill unless the underlying companies have the ability to raise prices without having to hire more workers. And you know who has that? The only group that goes higher. Oil and gas. Tech in particular is being eviscerated because the whole group is allergic to higher interest rates and inflation. Problem is the market's been up for so long that we're practically due for a pullback, and maybe this isn't enough. At this point, it's only safe to buy the stuff that's been completely mauled or could be coiled springs. If you stay tuned, I got 4 that you must track. My Charitable Trust, we're only touching stocks that have lost 10% of their value in a very short period of time. We did some buying today. We're not selling. Why? Because we've got plenty of cash, and we like it when the market comes down so we can put it to work. Are we in a this too shall pass moment? Sure, but the this too always hurts, especially it not hurts the Eagles quarterback. That hurts, too, especially because then you have to get used to hearing that Jay Powell must raise interest rates to whip inflation now, which means these people want him to trash the economy in order to save it from inflation. If you can't take the pain, it's not too late to sell something, but please only on a bounce, as long as you're nimble enough to get back in at a lower level. But the bottom line, the idea that everything will continue to be awful, that all 6 of these dice rolls will come up snake eyes, no, that's too easy. Something will go right with one of these. It almost always does. The sell-off will eventually right itself. I just think it's worth waiting on the sidelines with new money until we figure out how things can turn around, or your favorite stock gets clobbered to the point where it's too cheap to ignore, like the brutal meltdown in Micron after the close.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.